Well, you just have 2 more days left and we're getting into a brand new year. So perhaps you want to keep all those New Year resolutions ready, those party plans ready as well. Anuj is joining in this morning to tell us about the market itself. Anuj, the bears have the bears are on the front foot, it seems, this morning, given what the SGX is suggesting. But what's the sense you're getting?
Well, Sonia, the point here is that markets normally test the lows to see if there's a double bottom or not. So the 17,700 at some point will get tested. I mean, of course, not today, not this week, but maybe at some point in January. But what's happened overnight in the US market is very bearish, because you have the US market showing signs of a fresh bear market. The Nasdaq, in fact, had a fresh 52-week closing low. And from the 52-week intraday low also, it's just about 100 points above. But on a closing basis, it's back in the bear market and actually at 52-week lows. So in that sense, let's see if we do also test our lows. On the Nifty, what's happened is that the rally that we had has run into resistance right at the 10-day exponential moving average. And from there, it's turned once again. And the US bond yield is back to 4. So the rate hike close to 4. So those fears are back. The other thing is that the China theme, which continued yesterday as well, might still extend itself in 2023. That could be the big theme to watch out for. On the Nifty, since it's expiry today, I was looking at the options data, and 18,100 and 18,000 puts saw maximum open interest build up. So the first level to watch is 18,068. That also happens to be the low of yesterday and 22nd December. So that's the first level. And then 17,967, which was this week's low. So this is the zone. If the Nifty has to bounce, it will be this 100-point zone, 17,967 to 18,067. Because if 17,967 breaks, then a retest of last week's low is possible. Of course, you have to be prepared for the other side. If market takes out yesterday's high, not the base case, but if it happens, then of course there can be some short covering. And the Bank Nifty, of course, has been a stronger index. The Nifty has a problem in terms of IT. The crucial zone for Bank Nifty is 42,400 to 42,500. My sense is that gets defended. If not, then there can be weakness below 42,394. Again, that's not the base case.
All right, Anuj, thanks a lot for that. Maybe some weakness at open with some supports that Anuj just spoke about. How does that tie in with the FNO expiry this time around? We have Sneha Set from Angel One. She tracks the derivatives space there closely. Sneha, thank you for joining in. It has been a long series. Your thoughts on how the expiry is likely to play out?
Very good morning. If you see Nifty on Monday's session, we saw a smart recovery. And Nifty, if you see last two sessions, although the momentum was missing, but we could manage to sustain above 18,100. In fact, we have seen writing in 18,000, 18,100 put options, and on the higher side, 18,200, 18,300 call options are seeing some writing. So I believe for now, 18,000, 18,050 should be a buying zone, wherein we have seen writing. So I believe that could be a buying zone. So any declines towards those levels should be a buying opportunity for today's session. And one can keep a strict stop loss around 17,967. And upside potential target will be 18,140 would be the first level. And the second level will be 18,170 zone. If you see banking index, that has been outperforming recently, and I believe for banking index, the support has been around 42,400 followed by 42,200 zone, and on the high side, whenever we see banking index surpassing 43,000, then we can head towards 43,400, 43,500 zone.
Okay, all right. Any stocks you want to talk about?
See, if I'm liking banking index, I would say the stock which I'm liking is ICICI Bank. If you see recently, this counter has corrected towards the 89 EMA, and from those levels only we are seeing some smart recovery happening, and in fact the volumes were also good recently. So I believe we can go ahead and long ICICI Bank at current level with a stop loss of 879, and a target will be around 932. Apart from this, we are liking M&M from the auto space. M&M has recently shown us yesterday, if you see, despite market was under pressure and we saw some selling pressure, in the end as well, M&M was making highs, and it closed around the higher zone only. So I believe at current levels, it is a buy. If you see, the base is has formed around 1200, 1210 zone. So I believe we can keep a stop loss around 1225, that is yesterday's low. And for the upside target of 1297, we can go ahead and long this stock.
All right. Thanks a lot for joining in. Have a great day. Well, for the pre-opening, rates are settling in a bit lower. So the Nifty is down almost 90 odd points. It is heavyweights like Titan, TCS, Coal India, Hindalco, Eicher Motors that are under pressure right now. And on the upside, you have Infosys, Dr. Reddy's, Bharti Airtel and Divi's Labs, which is holding up quite well. Gurmeet Chadda is still with us, so let's just get a quick comment in from him before we head on to the next discussion. Gurmeet, we're going to talk a little bit about the auto sector now because Kotak Securities has written quite a cautious note on the sector where they've downgraded the passenger vehicle space. Are you cautious as well here? There are, of course, a few pockets which are quite bright, the likes of M&M, etc. But in general, how are you feeling about autos as we head into the new year?
Not really, Sonia. I think the feedback from our clients who are large dealers also is that the propensity to spend is high. So there could be, also December is a year where the year changes. So a lot of people postpone the purchase in light of depreciation, in light of the resale value also. So December invariably is a slightly softer month historically. Two wheelers we like TVS. I think it's been a good turnaround in two wheelers if you compare it to Bajaj and Hero, so their premiumization and mix continues to do well. iQube the production is likely to be ramped up to almost now 10,000 units, and their plans of ultimately getting to 25,000 units by FY24. The overall mix is good. I was looking at the margin last quarter; they were able to be in double digit despite all the headwinds. So that's something which has done well, and it's been a little more prudent capital allocation policy as well. Their captive NBFC also seems to be doing pretty well, which is TVS Finance. M&M you mentioned. I think even if you see monthly sales, you will see the dominance which EVs and SUVs are having. So Tata Motors on domestic side and M&M on the SUV side. I think they look set to recapture that 20-25% market share there. And selectively some auto ancillaries and some correction has happened. If you see from the peak in M&M also, or in some of the other names also, I mean, they're down about 10-15% already.
All right, Gurmeet, thanks a lot for joining in and giving us your views on a multitude of stocks. And before we let you go, couldn't help but notice, the image of the Golden Temple behind you. And it's also an auspicious day today. It is Guru Gobind Singh Jayanti. So wish you, your family, all your people, your friend circle, the best of wishes and blessings before we wish you a happy 2023 as well.
Thank you, Mangalam. Wish everyone, may Guru Gobind Singh Ji bless us all.
All right. Thanks a lot, Gurmeet, for joining in. Have a great one. The pre-opening rates have now settled lower by about 70 odd points. The Sensex is down 270 points. One sector that continues to be on our radar is autos. We are heading into a new year. There are a slew of new launches. There's also the auto sales numbers that come out on Sunday. Kotak Securities has a note on the auto sector where they sound very cautious. They've downgraded growth estimates for the domestic passenger vehicle segment to a moderate 3% from the 8% that they had earlier. To discuss what's going wrong, Rishi Vora, the institutional equities at Kotak Securities, joins in now. He tracks the space closely. Rishi, good morning. Thanks for joining in. Why have you downgraded the growth estimates for the passenger vehicle space? What is your biggest concern? And in terms of individual stocks, where are you most cautious now?
Right. Good morning, Sonia. So if you look at this year, FY23, we will end around 24% YOY growth in the domestic passenger vehicle market, which is a pretty strong growth. Obviously, there was a lot of pent-up demand which the industry had over the last 1.5 years due to supply chain issues. Now, going into FY24, there are a few challenges which I see for the sector. One is upcoming regulatory emission and safety norms for the sector, which will further increase the cost of a vehicle. Secondly, also this pent-up demand, we expect it to wane off a little going into FY24. And also, if we look at the inventory levels for a few of the models, it's already reached 1.5 months and even closer to 2 months for a few models. Thirdly, also for the industry, almost 11% of the volumes comes from the CNG segment, and the prices continues to remain at elevated levels, which in our view will defer the demand, at least the replacement demand in the CNG vehicle. And obviously, higher interest rates, higher inflation obviously impacts the savings for the household. That will also have some bearing going into FY24. So, all multitude of these factors we believe will weigh on the overall recovery it will recover, but we expect it to moderate a little going into FY24. And obviously, base is also pretty high.
you do with individual stocks? M&M, for example, has been the biggest gainer in 2022.
Right.
It has a slew of new launches, the first ever electric vehicle SUV coming out in Jan. Do you see more upsides here despite your overall cautious view on the sector?
EV obviously will be one of the bigger triggers for M&M. Going into next year, M&M has only like two launches, 2 to 3 newer launches. One is obviously the electric XUV 400. We'll have to see pricing of that product. That would be very critical in my view to understand, the monthly sales which that product could do. Apart from XUV 400, they have Fido Thar, and then their next EV comes by end of December, 2024. So that's a pretty long time. So like over the next 2 years, there are just two launches, for Mahindra, which will drive the sales momentum. But overall, I'll still be a little cautious. But for M&M on the tractor side, which is still, important segment for them, that continues to do well. That remains steady. So that will, in our view, will support the earnings momentum.
The stock of 2021 on the way up was Tata Motors, and it is also the stock of 2022, this time on the way down. I see you have an ad rating on Tata Motors now. Is that because of the correction that we've seen in the stock price, or is there anything fundamentally that may surprise you on the upside in 2023?
It's mainly to do with the correction that has already happened from 500 odd levels. JLR again remains, the business overall remains quite volatile because of supply chain issues, risk of a global recession that will again weigh on the volumes, especially in the developed geographies. So we'll have to see. Next 2 quarters, in my view, will be at least a little bit challenging for the JLR business. And post that, I guess we will see, stock recovering as well as volumes recovering for the JLR business. But yeah, next 2 quarters, we may see some pressure.
All right, thanks very much for that. So that's a quick view from Kotak on the auto space, cautious broadly. Now, Sudarshan is joining us for his 9:10 calls, 5 minutes to go for market opening. Sudarshan, what do you have?
Well, for the Nifty, it's looking at the short side for the day. Apollo Hospital is an intraday short with a stop above 46.80.
Okay, and what about you, Mitesh? What would the big call be at 9:10?
I'll go with a sell on IDFC First Bank. Keep a stop at 57, look for a target of 53.
Okay, a sell on IDFC First Bank, got that. Well, in pre-opening, a couple of stocks do deserve mention. You have a lot of selling coming into the financials, especially the PSU banks, IOB, UCO Bank. There's even Yes Bank, PNB, Bank of Maharashtra, all trading in the red right now. So just keep that on your radar. And on the upside, these Adani group stocks, Adani Wilmar has been trending higher for the last few days. So that continues to see some traction. But Abhishek is tracking Poonawalla FinCorp today. Abhishek, why is that?
Well, Sonia, Rising Sun Holdings has been purchasing, shares in the company. So in the last 3 trading sessions, they have purchased about 0.43 crore shares at an average price of about 289 per share. So about 125 crore of investment is what they have done in the company over the last 3 days. So this has taken their stake to about 62.05% versus 61.48% that you had as of last week. So it's up about 0.57%. Recently, the company has sold its housing finance arm to TPG for a consideration of about 3,900 crores. So the deal is priced at a valuation of price to book value of 3.4x Q2 FY23, and deal would get about 51 rupees per share as an EPS to the company. So valuation of Poonawalla FinCorp as of Motilal expectation at FY24, it's trading at a price to book value of 2.26 times and FY25 of about 2 times. So Motilal Oswal had initiated coverage on the company recently with a buy recommendation and a target price of 350 per share. Back to you.
All right, thanks very much, Abhishek, for that. So that is Poonawalla FinCorp in focus. Dr. Reddy's is the other one we want to refocus back on. Ekta's here with that. Ekta, hi.
Thanks for that. Well, yes, Dr. Reddy's is in focus because the company has said that all claims with regards to Revlimid generic have been dismissed. The company has been named as a defendant along with Syngene as well as BMS as well as several other generic companies. This development took place in the month of November, and at that point in time, Dr. Reddy's had corrected around 3 to 4 odd %. Now, the complaint asserted claims of the defendants improperly restraining competition, maintained a shared monopoly in the sale and brand of Revlimid generic. So plaintiffs have voluntarily dismissed Dr. Reddy's from the case, and hence it should definitely be a definite positive for Dr. Reddy's. But I would also be looking out for other stocks such as even Natco, which also had an antitrust lawsuit with regards to Revlimid generic. We know the news with Dr. Reddy's, but the others could see a positive read-through as well.
Okay, there's also Ipca Laboratories, there's Biocon that you're tracking, so you pretty much have your hands full today. What are you looking at?
Well, yes, Motilal has written on Ipca. They have a buy with a target price of 1,000 rupees. They're progressing steadily to reclaim growth path, and the domestic formulation is a key driver of sales growth. This is fueled by market outperformance in dermatology as well as urology, and they are supported by a higher market rep base as well, which is basically the market representatives. Ipca is building levers to almost double API exports by FY27. Export formulation sales are likely to revive FY24 on. Philip Cap has written on Biocon. They are positive on the acquisition with regards to Viatris's biosimilar operations. They are estimating that Biocon Biologics will achieve global scale and sales of 1.85 billion and EBITDA of 425 billion in FY24.
All right, thanks a lot for that. Well, we're just counting down about 6 seconds left for the markets to open, and looks like it's going to be an opening in the red. Down about 80 odd points for the Nifty. The Sensex is down about 300 points. And it is, many stocks are under pressure as we open trade. There's Hindalco, Coal India, Eicher Motors, ONGC, TCS that are down about 1 to 1.5%. It's just dragging its feet, the overall index. It's nothing alarming in terms of a sell-off, still pivoting around that 18,000 mark. There is Asian Paints, Reliance, Tata Steel, IndusInd Bank that are also under a tad bit of pressure in the large caps. And on the upside, it is pharmaceutical stocks that are holding up. Dr. Reddy, Sun Pharma, Divi's, Cipla are all in the green. And then Bharti Airtel is in the news, so it's up about 0.4%. UPL is up just about 0.1% or so. All in all, you'd have to say the market breadth is slightly on the weaker side with over 1,000 stocks on the declining side. But it's, heavyweights like Reliance, HDFC, ONGC, TCS that are dragging the markets lower. 80 points now down on the Nifty, still facing a bit of resistance at that 50-day moving average that we were talking about earlier, which stands at 18,235. So that seems to be a bit of a hurdle. Weak opening for the market, now down 80 points. What are you looking at in the mid-caps?
In the mid-cap end of things, the thing that stands out is that today the advanced decline is firmly in favor of declines at the open. We have nearly 1,500 stocks which are lower for about 800 stocks which are higher. So roughly close to around 2:1 is the advanced decline ratio. And that's something we will watch out for closely, primarily because the last 3 days, the market breadth was firmly in favor of advances. Among the stocks which are losing, we have Shriram Finance, which is down almost 5.5 odd percent. Delta Corp is the other one, which is down 2%. Counterintuitive on Delta Corp primarily because towards the year end, it does well. PNB comes out of FNO ban, down about 1.5%. So this is something we'll watch out for because PSU banks usually pick up pace after a bit of a dip. On the way up, a lot of these stocks actually, which have been doing well all through this week. Bikaji, the 4th consecutive session where we see an up move of 5%, an upper circuit move. This week it's up around 22 odd percent. We're seeing some purchase come by in Adani Wilmar as well. There's a brokerage note on that counter. A good move for Adani Wilmar all through this week, up 20 odd percent. And we're seeing some weakness in Lemon Tree Hotels. We're seeing some gains come by in Metropolis Health, some in Aurobindo Pharma. So it's really mixed with more decliners than advancing stocks. Prashant?
It is, Mangalam, at this point in time. So when the advance declines to advances rather, has swiftly moved to being 2:1. So about 1,200 stocks are lower, 560 odd stocks are higher. This is still early days, just 2 minutes of market open. But the big one, the big price move is what you mentioned. Shriram Finance is down 5.5 on big volumes as well. I'm not sure if there's any particular news flow or anything. We had the management of Shriram Finance just with us yesterday, that's nothing, in the commentary indicated any kind of great pressure or anything of that sort. Leader in the sort of second-hand commercial vehicle space. So that is down on volumes. Well, what else? Hindalco is down 1.5%, 458. The PSU banks all reversed in the last 30 minutes. So IOB, PNB, Union Bank, maybe there is a bit more on the downside here. Mazgaon Dock is another one, which is always, I mean, it does nothing small, always large moves one way or the other. It's starting 2% lower, 783 on Mazgaon Dock. Tata Elxsi is down 1%, 62.62 on Tata Elxsi. National Aluminum Nalco is down 0.5% or so. UCO I can spot with about a 1.5% cut as well. Public sector banks will be interesting. We had, of course, Canara Bank yesterday, interesting conversation. And today, a little later, we have the country's largest bank, SBI, with us for a conversation as well. Adani Wilmar, 3 days in a row, 5% circuits. Today, it starts about 2.25% higher. What else? Orient Paper, I think I can spot with a 5% gain. Moripun Laboratories has been all over the place. It's up 4% this morning. JSW Energy is up about 2%. BKG is up 5%. And so it goes. But it's a kind of quieter start as we've been expecting. 80 points, 85 points lower, 18,038 is what you have as we begin this session. Nilesh Shah is a market master of the day, managing director at Kotak Mahindra Asset Management Company. Nilesh, great to have you with us here. Thank you very much. Last but one day for the end of the year, and we look into 2023. So season's greetings, first of all, to you, to your family, your team, from all of us here at CNBC-TV18.
Thank you. Wish you and your viewers a very season's greetings.
Nilesh, I think you'll have to unmute yourself. Sorry. Or maybe my...
I'm on unmute.
Okay, we can hear him.
I think, okay, all right. It's just my earpiece. Thanks for that, Nilesh.
It's the end of the year, you know. Everything stops working one by one.
All right. Nilesh, I want to start with that Canara Bank conversation because I think that's interesting. They told us yesterday, we had the management of Canara Bank with us. They said, they raised interest rates a few weeks ago for 7% for senior citizens, 7.5%. In 3 weeks, they got 1 lakh crores in deposits. They said, of course, that gives them great ability to lend and keep up with 15-20% lending growth. But is there a scramble for deposits as you're seeing, or how do you read this broadly?
So, Prashant, if we look at the overall liquidity in banking system at the beginning of the year on 1st April, it was about 8 lakh crore. And then over a period of time, it kept on dwindling at about 2 lakh crore. Now, clearly, when liquidity becomes scarcer, then obviously there will be scramble for deposits. There will be higher interest rates. So my feeling is that right now, from asset side, market will focus on the liability side of the bank. Banks with better franchisee, better ability to raise deposits at a lower cost will do well.
Nilesh, good morning and thanks for being with us on the channel. Hope you have a great 2023 and wish you the best. You, your team, your family, everyone at Kotak. How are you feeling about the new year in terms of asset allocation? Do you think fixed income will give better returns compared to equities? What's the best way to approach it this year?
So this year, the gap between return of equity fund and a debt fund will be fairly narrower. In equity, in order to make money, people will have to buy on dips. People will have to buy on correction. They'll have to pick up right stocks. So it will be suffice to say that making money in 2023 will be difficult, and only a disciplined investor will be able to make money.
Okay, disciplined investor will be able to make money not only in 2023, I believe across the board. Nilesh, always a pleasure speaking with you. In equities itself, I wanted your thoughts on active versus passive funds, because not a lot of fund managers were able to beat the indices, the benchmarks this year. Do you think it's going to get incrementally difficult in 2023? Or maybe 2023 will be more of an active fund managers market than a passive fund managers?
So again, are we comparing apple to apple or apple to oranges? Indexes have more than 10% weightage in scripts like HDFC Bank, Reliance Industries. Fund managers aren't allowed to go beyond 10%. Indexes include and exclude stocks at the closing prices, but fund managers have to pay the impact cost. The third thing is cash balance. Index does not keep any cash. Fund managers provide daily redemption. More importantly, globally, total return index are compared with gross of fees. In India, we compare it with net of fees. So these are the 4 factors which one has to make an adjustments while evaluating active versus passive. Now, again, there is a popular perception that fund managers are not generating alpha. Now, look at any small cap, mid cap fund, they all have generated alpha. So effectively, we are talking about a large cap fund where probably some funds have not generated alpha. Now, again, looking at 1 year performance of a fund for alpha generation will be a little bit difficult because there are many stocks and indices which fund managers are not comfortable buying because of valuation. Now, this call may go wrong in a year, but it may play out over 3-4 years. We did see in 2017 when we didn't invest in an IT company, which became 4% of mid-cap index. 2017, we underperformed. Today, same mid-cap fund is generating 7% outperformance over benchmark index because we didn't invest in that IT company. So I think there will be scope for both active and passive fund managers. As long as we add value to our investors on a longer term basis and not on a daily basis, there will be space for active fund managers.
Nilesh, just to sort of pick up from what you told us last time as well when you joined us, you were talking about, the second quarter earnings, and you told us how maybe generally there is a bit of deterioration at the marginal level, right, for companies in terms of profitability matrices, cash flows, etc. As we wrap up the third quarter, what can you tell us? I mean, what are you picking up? Because I mean, your investment team would be interacting with so many companies, right? So you have a bird's eye view of how things are really progressing as we wrap up this quarter. Incrementally, how are things looking?
So, Prashant, clearly September 22 EBITDA margin was lower than June 20 COVID impacted EBITDA margins. Clearly, there was a hit on inflation and there was effect of slowdown at the bottom end of consumption. Now, there was hope that Diwali and other festival season will pull up the demand. So far, we are getting fairly mixed signal. Companies, manufacturers which are focused at the top end of the market, they are doing reasonably well. Their challenge is securing supply chain so that they can deliver to the customers. However, companies which are focused on bottom end of the consumption, they are living on a month-on-month basis. They are not very sure of demand recovery. Our feeling is that in December 22 quarter, the hit taken thanks to the stock correction coming in will be over, but the volume growth is something which we will be critically watching. Clearly, the market is discounting rebound in the EBITDA margins to June 22 quarter level rather than sustenance of September 22 EBITDA margin levels.
The IT sector, Nilesh, was the worst hit this year. Do you think the fortunes will change in 2023?
So for IT sector to run, not only the bogies cannot lead the IT sector, the engine has to run. And the engine in our context is NASDAQ 100. Clearly, there are tech-dominated companies in NASDAQ 100. If they don't bottom out and start performing, it's unlikely that global investors will be comfortable investing in Indian IT sector. Domestic investors also can look at IT sector based on their valuation, but to some extent their decision will be influenced by how global factors play out. So in our opinion, over next 3 to 6 months, IT sector should bottom out in US and correspondingly in India. Investing in IT sector at this point of time is like catching a falling knife. You know there will be some blood on hand, but if you can catch the falling knife, eventually it will make money for you. So this is accumulation phase in IT rather than outright buying.
Right. Given all the things that happened in 2022, it was rather choppy. The only two clean themes that worked through the year, one was defense, the other were PSU banks. Do you have any themes in mind that would work or could work for 2023?
So one sector where we are reasonably bullish is infrastructure. We believe before election, every government will focus on building up of infrastructure. This budget, like last budget, there will be enhanced allocation to infrastructure sector. And even the private investment seems to be reviving albeit it is taking baby steps. Put all these things together, a higher allocation in the budget, a nascent revival in private sector investment, and speed of execution, courtesy 2024 election in mind, infrastructure sector could do well. Two sectors where we have to accumulate now. They may not bottom out today, tomorrow, day after tomorrow, but certainly over the next 6 months, they could provide good entry point is IT and pharma. Both sectors have been derated significantly. The volume growth or value growth in both those sectors are now in line with expectations of the market and could actually surprise on the upside. So IT and pharma provides great accumulation opportunity over next 3 to 6 months. And infrastructure sector is something which one can invest right now with a view to outperform market in 2023.
So IT and pharma, you're saying, provides great opportunity over the next 3 to 6 months, you said?
Yes.
Okay, that's great to hear. What about some of these pockets that have done well, but perhaps not as well as what people were expecting, right? Autos, for example, two-wheelers are still struggling. There are some pockets of value, but other than that, the entire sector is, I mean, it's sort of lackluster for the last many weeks and months. Your thoughts?
So on the auto sector, clearly there is a differentiator coming where top and mid-end cars are selling like a hot cake, and their problem is supply chain management. With the correction in commodity prices, margins have started expanding over there, and the waiting period is still fairly long. On the other hand, at the mid to lower end of the products, there is lack of demand. The sales are still less than last year, and the benefit of commodity price correction needs to be passed to consumer to revive the demand. So we believe passenger vehicle companies will do well, whereas the two-wheeler company will have some kind of struggle. On the auto sector, I think the opportunity also lies in auto components which are related to auto sector. There are many companies which are not only catering Indian market, but also becoming part of global supply chain management. As globally there is revival of auto sector, these companies will also benefit. So be selective in auto sector, passenger vehicle companies, export-oriented auto component companies that should outperform the market in 2023.
All right. No, fair enough. You know, Nilesh, let me just take a quick stock of markets. Just coming back to you, 73 points lower is what we have on the index. So things are kind of getting not very much by way of change. Market breadth now, I think now is a better time to look at overall market breadth, down 74 in favor of declines. 1,100 stocks are lower, 840 stocks are higher. Shriram Finance is, I mean, this is peculiar. There's a 6.5% cut now. 1,303 on Shriram Finance is what is coming through. But that's the only large one which is down. Otherwise, not very much, at least not backed by volumes. Nilesh, so many companies that we've spoken with recently, right? I mean, Shriram Finance is one. They said that new CV sales are kind of very slow. Second-hand, people are able to afford. It's more viable. Sundaram Finance told us something very similar. Post-festive has been pretty muted. We had the management of V-Mart with us, Tier 2, Tier 3. They were talking about perhaps revival, next year. Right now, it's pretty slow, and so many others. Over the last 1 week, last 4-5 days, are you worried that this bottom of the pyramid slowdown that we've all been aware of, we've been talking about, that is getting a little more entrenched now? Nilesh, what's your sense?
So undoubtedly, that is one of the cause of concern for our economy. Now, there are two explanations which are being given. One explanation is that people had borrowed money during COVID time, and now they're repairing their balance sheet by repaying borrowing, and hence they are not consuming. If that is true, then certainly there will be a day when bottom-end consumption will bottom out. People would have repaired their balance sheet and they'll start spending. The second thing also which is being said is that there is genuine problem where inflation has hit bottom end of the consumption. There is a lack of growth in income in real sense at the bottom end of consumption, and hence there is a need to support them. I don't know which one will prevail, but clearly we are watching December 22 quarterly results. We are talking with companies, especially engaged in rural India and at the bottom end of consumption, trying to figure out where will this bottom out. It's now almost a year where bottom end of consumption is growing at a lower pace, is growing negatively. It's selling lower than last year's volume.
Right. Do you think some of the global cyclicals will make a comeback now that China is opening up? I mean, we have seen some traction build in the metal stocks this week. Do you think that continues into 2023?
So metal is not really our forte. There are too many variables which make the price swing quite dramatic, and it's humanly impossible to predict those variables. In metal space, where we have concentrated, we have focused upon companies where operating leverage kicks in. Suppose if there is a company which has borrowed debt to set up capacity, there will be a period where capacity utilization will be low, debt burden will be high, and the stock price or equity valuation be depressed. If we can go and capture those kind of companies, we not only benefit from operating leverage, but also if commodity prices benefits. That strategy by and large does work well for us to create value or to make return out of metal stocks. And I will recommend investors to focus on companies which have operating leverage in global cyclical sectors.
One final question, Nilesh, because we're heading into this discussion next, so I just wanted your thoughts on it. On the PSU banking space, we're going to be speaking with one of the biggest bankers in the country. And, you know, PSU banks have had a super year, one that we haven't seen in a very long time. Do you think that this loan growth, this double-digit high teens loan growth that most PSU banks have reported, is it something that can sustain? And is this a space that where investors can look at even beyond the SBIs, you know, in the broader markets as well?
Undoubtedly, PSU banks have been a bright spot in our market in 2022. But now their valuation differential vis-a-vis private sector bank has narrowed down. Now the expectations have been built in of a cleaner balance sheet, of a double-digit credit growth, and a strong liability franchise, which gives them huge advantage in terms of cost of borrowing. As long as PSU banks are able to deliver on these three expectations, I think people will look beyond SBI into PSU banking sector. But mind you, there is a fair amount of supply potentially coming up in PSU banking sector, as many of the banks will require growth capital if they want to fund double-digit credit growth. My feeling is that in 2022, PSU banks were exceptional performer. 2023, some of them will be exceptional performer, but most of them will be market performer.
All right. Thanks a lot, Nilesh, for joining in and giving us all those details. I mean, we wish you and your team a very, very happy 2023. May the cult of equity, as you always say, only grow.
Thank you.
Thank you. With that, let's move on to the next discussion that we have for you. Ather Industries is the next corporate we're speaking to. Recent news flow suggests that there has been buying activity among dealers that's gotten muted on account of a conscious attempt to keep inventory levels low. We do have with us Aman Desai, who's the founder and director at the company, joining in. Aman, thank you for joining in. Do you think buying activity has been reduced, and are there any supply disruptions that still exist in the global market, or it's just individual chemicals and you're not facing the same?
Mangalam, good morning. Thank you for having me again. Always a pleasure to be here. In terms of supply disruptions, we don't see that happening anymore. We have seen that the global supply chain, as well as demand and supply and customers have kind of come back, are coming back gradually to the norm that was there about 2 quarters ago. And so I think things are looking good, and we are positive. In terms of buying, I don't really understand your question, if you could repeat that.
No, so we have a note which has come in from one of the brokers. They say that buying activity amongst dealers in the chemicals industry has been muted due to conscious attempt to keep inventory levels low. There are demand pangs in key markets like textiles, paints, coatings, as well as construction chemicals. So just wanted your thoughts on this.
Yeah, I understand now. So in terms of buying from dealers, we don't really deal with dealers as much. So we are dealing directly with customers, which are multinational customers, domestic and globally, across the industry spectrum. So for example, pharmaceuticals, agrochemicals, material sciences, and oil and gas. And so there's no question of us working with dealers. In terms of the global demand, in the last 2 quarters, we saw a pharmaceutical softening in the global market, which is kind of gone back to, it's starting to go up to its normal demand as well right now. And that was because the pharmaceutical customers were trying to reduce their inventories, which they had stockpiled in the time of the COVID pandemic.
Okay, so
as such, we don't see any such issues.
But can you give us a little more details? Because, 65% of your business comes from exports. You said that pharmaceutical demand was a bit under pressure. Most companies have indicated that export markets have been lackluster. So any impact that this would have on your business? What would the export revenues be? Are you expecting to see a fall this year?
Yeah, Sonia, no, we have not seen any tapering off in the export demand. In the kind of contracts and the arrangements that we have in place with our customers are usually multi-year, especially in the contract manufacturing side of the business that we have. And these are multi-year supply agreements that are in place. And there's been absolutely no softening in especially the CRAMS business model and the contract manufacturing business model. Rather, it has been the contrary, where we have seen demand grow up and go higher. In terms of the large-scale manufacturing business model that we have, which is largely driven by pharmaceuticals, globally in the export area, there has been no softening. In the domestic region, in the last 2 quarters, there has been some softening. But again, as I mentioned earlier, this has picked up again. And so export, in terms of our export outlook, in terms of export business, we foresee that to be growing in the quarters to come, as well as in the current quarter.
Okay. Can you tell us a little bit about, first, if you can tell us a little bit about the numbers itself. What are you looking at? If you're expecting a growth in the second half of the year, I think your revenues grew just about 6% in the first half, and you're sitting on a base of about 300 odd crores. In the second half, what could the growth look like?
So especially in the last quarter, the Site 3 manufacturing, the new greenfield manufacturing site that we have is coming online as we speak now. We are going to, over the next 2 weeks, we are slowly starting up production in the new greenfield production site. And so that will have a significant contribution to revenues in the last quarter of this current fiscal year. We are launching 5 new products for the first time in India. There is significant demand for these products already existing. There's a significant order book already existing for these new products that we are going to launch. And so we anticipate the new greenfield manufacturing site coming up right now to add significantly to the top line, as well as maintain the bottom line and try and increase the bottom line.
But you're not giving us any numbers. We're still looking for some kind of growth targets.
So we will achieve growth over the last year. We will try, and since it is only the last quarter that's going to benefit from the new greenfield manufacturing site coming up, we are cautious and cautiously optimistic in venturing out growth numbers. But we will achieve growth, whether that is in the higher single digit or double digit growth, we will see. But we are definitely anticipating growth year on year.
All right. And finally, before we let you go, you added 11 customers in the second quarter. In the third quarter, has that number been higher than the previous one? And at peak, what will R&D as a percentage of sales look like?
Yeah, in terms of customers, we have consistently added customers all the time. What we are always more excited about is the CRAMS space and the contract manufacturing space, where I think we are firmly established ourselves as partners with various multinational customers across the industry spectrum. And we have added, I think, close to 7 to 8 customers in this current quarter. In the large-scale manufacturing business model also, I think the same amount of customers have been added. And so I think the number of customers added have increased, I think, slightly. I'll have to check. But in terms of, and I forget the last question, Mangalam?
That was R&D as a percentage of your revenues.
Yeah, so we have purchased adjacent plots of land to our R&D center, and in this last year, we have tripled our R&D infrastructure to become a world-class R&D center. Currently, the R&D expenses stand to about 7 to 8% of the overall revenues, and we do anticipate that the R&D spend, which is the heart and the engine and the driver of our company, will remain at such high levels, at 6 to 7 to 8%.
All right, we'll leave it at that. Thanks a lot for joining in, and have a great year ahead. By the way, just keep an eye out on the market. It's 100 points lower now on the Nifty, so we've moved to the low point of trade. The Sensex is down almost 400 points, so turning out to be quite a disappointing morning for the bulls, that is. The Bank Nifty is now down over 3%. So this is the lowest point that we're looking at, and we have such a long day to go. But when we come back, one of the sectors of the year undoubtedly has been PSU banks. Dinesh Kumar Khara, the chairman at State Bank of India, will be with us to discuss what 2023 looks like for the banking sector. Do stay tuned in for that conversation. And later, we will also connect with Ram Praveen Swaminathan of Mahindra Logistics to discuss how the logistics sector is expected to perform in 2023 and how's the business momentum there. Stay tuned. Welcome back. Well, 2022 has been a step